Today I'm going to walk you through the exact market structure method smart traders rely on step by step, no guesswork, just clear price action. And we're going to cover this today on the US dollar CAD. I'm going to show you some top-down analysis on an absolutely clean chart as we walk through from a monthly all the way down to lower time frames so you can see with full clarity marking this structure. By the end of this video, you should understand structure, but if you're still struggling, still not quite there, then do check out the 90-day profit trading system. You'll find a link in the description of this video so you can head over now and apply to join that program. So we're going to start on the monthly time frame. I'm going to walk you through the use of this smart money market structure technique, show you how simple it is applied, how quickly we can go through the time frames, and you can do this to as many pairs you like each and every day to give you that edge in the market. So the first thing we're going to look at is when we're using a smart money structure, we're looking for where we can see the last high. Well, this is the last highest point. We've swept over here. What we can mark off is a level at this high. Now to do this, we're going to magnetize it off. We're going to mark this off as we call a week high in the market. So we have a week high as a monthly week high. We're on a monthly time frame here. Looking back, this low is going to be my current low, and it's going to be a strong low in the market. Now, I'll go through exactly why I'm marking these off as I am in a second. So I want to show you how quickly we can mark this off, and then we'll backtrack and we'll go through how we mark it all out. So you're going to get the quick way of doing this, monthly breaker structure. Then we'll go through and I'll show you the clarity of why it works so well. So we have a monthly bias. The market came down, swept the low again here, and then we ran back and took this monthly high. Now, since then, we've swept this monthly high. Very often, you're going to find markets going to sweep these levels, and you're going to find that the accuracy is unbelievable. We sweep the level, and we start to see the market falling down. Now, when we go to lower time frame, you're going to see exactly what's happening here as we see a structure shift. I can see this without even looking at this chart. When we see this outside candle, that outside candle shows me a move is coming to the downside. Let's drop down to the weekly time frame. Weekly time frame, we're going to do the same thing. I'm going to mark it off from this high here. That's where we see a valid breaker structure to the upside. That's going to be my weekly week high. Then what we're going to see is the market's going to make that break of structure through that high, and that will become a valid breaker structure. Just wanted to show you, we quickly look at those highs in the market, and then we can identify where it all sits. So now we have a valid weekly breaker structure we can mark off. When we're marking off the high, this is going to be my high, and it's also going to be a current week high in the market. Now we can mark off the current low. That is going to be right here. That's going to be my strong low in the market. See how quickly we've just marked up these three levels. I'm just quickly going to go through, and then we'll go back and I'll go through exactly how we do it. So there is our monthly. We're bullish. There's our, monthly we swept the high and we turned bearish. There is our weekly time frame. And now the market is potentially running back down to this area, and I'll go through why in a moment. So now we've got that, we'll go through to a daily time frame. This is how we can quickly go through these charts. And you can do this each and every beginning of the week, and then just update your lower time frames throughout the week. So we have a daily. Let's have a look at a daily. So my previous low, let's mark it off a low first. There's a low where we saw a break to downside. So what does that mean? That means that's a break of structure. So I'll walk through this one more precisely. So this is a break of structure to the downside. That's going to be a daily break of structure. So we have a break of structure to the downside. I can mark this off as a new low. What does that create? A new break of structure for me. So again, I can mark this off as a new daily break of structure. Look how quickly we can identify this. Next move, let me have a quick look. That chart is not valid, so this is my next low in the market. So I've marked it off. That's my current low. Then we zoom into this area, and I'll go through closer in price now. So what we're looking at is this is a valid break. So I'll just go through every level so you can see where I'm marking it up. That's a valid breaker structure for this smart money structure. This thing is a valid low. We just break out there. This becomes a valid high, and we break up bullish. So again, let me just go through this. We have a new breaker structure there. And then instantly we get a breaker structure right here. So we've gone from a bearish to a bullish bias. Now we have a new low created here. So let's mark this off as a new low. That's a new break of structure. I'll grab that same level and this becomes a new low. Again, you can see the way the market is moving here. So we have a new break of structure created right here. We continue with the market. Okay, so there's another new low there. So mark it off again, another break of structure. So you can see this market is in a strong downtrend. We had a small shift here to the upside, and I'll go through what happened there a bit later. So stay tuned, keep watching to understand what you could have actually achieved here, understanding this market. Then we have, in fact, let me just grab this level again. This then becomes a low. So this becomes what I class as a current week low in the market. So we mark this off as a week low. We had a strong high at that point, was right here. Now we broke through to the upsides. What does that mean? That means that's a new break of structure. So let me just mark that off. A new break to the upside. That's the first time again since this move here we've seen a shift to the upside. So when we see this, this becomes a strong low in the market. So we'll change that to a strong low, and this high here becomes what we class a weak high in the market. What that means is we're expecting price to hold at this low to want to run this high. You can see the market's come down here, higher low, potentially wants to run towards that high again. So now we can look back at this we've just marked up. And we're going to identify what we had first and grab that drawing tool. Break of structure, another break of structure, and then we continue to be bearish. A flip to the upside here. Now what actually happened is the market swept this high, I've got just there, into an imbalance above. This leftover imbalance right there in the market. We wigged into it and then we dropped off again and reversed structure. Now this is understanding liquidity, which is something completely separate to this. This is all about just showing you a fresh, clean chart on the US dollar CAD, exactly how I'll be looking at market up and how you can too for that clarity. So we can identify the market does go back bearish, continues bearish. Let me just show you again. So we break structure here, break structure here. We then flip bullish, create a new high. We pull back here into this area. We push up, we fail to run the high. We come back into a new higher low to this area, and we look like we're going to head back up towards that high again. And that is just reading structure. We haven't done anything yet. We haven't even looked at supply and demand, liquidity, and balances really fully. This is just showing you the clarity you need, understanding the structure. That's the whole point of this video, is to give you that clarity so you can see how I do this step by step. So now we have our 4 hour. What we're going to do, we're going to back this off. Let's get rid of some of this. We don't need all this on the chart now. So we just have the local areas. We'll take this one off as well. So last break, last bullish break. Let's now drop down to a 4 hour time frame and we'll do the exact same thing. Now this time what I'm going to do, I'm going to look from this move, work our way up and work our way through this price. So you can see the whole process. And then when I've done this chart, before we look to moving the lower charts, I'll then go through the steps you need to do to understand how to find these breaker structures, find and mark off these valid highs and lows that I've just been through showing you. So when we look at this on a 4 hour, let's grab a line. This is a potential 4 hour break to downside. And then we have a break to the upside here. We have a new breaker structure here, a new breaker structure bullish there. Then we finally have a break bearish. So I'm going to mark that off and we're going to start from this high, from this low, shall I say, for a breaker structure. So this is a 4 hour breaker structure to the downside. Now you're seeing all these different areas here that I've got preset. Don't worry about that because that is something that's part of the 90-day profit trading system. You don't need to understand that right now. All you need to understand is that single BOS, and that basically means a break of structure in the market and where we have a high and low created. So this is our breakout point for our current high is here. I'm going to mark this off now as a high so you can see how this works. So we have a strong high in the market. From that move down, what we're then going to look for is our valid low. And this becomes my valid low and that becomes my weak low. What we expect is to see price come back and continue to run the low. Now what actually happened, we went all the way up this one wick, swept the high Again, look at the accuracy here. We swept that single high we've already marked off, and we marked this off ahead of time, so we knew it was there. That's the accuracy and the clarity you'll get from this market structure I share in this channel. We have a break to downside, so now we can remove this. In fact, let's just delete that one away, and then we'll add a new break of structure from here, and that's our new bearish move. So we've got a first break, second break. From this point, that's our new low created. Now for our new high, this is going to be our new high. And again, don't worry, I will go through after marking this chart up step by step how you do this. So this is our pullback phase. Then we get a new breakdown. Can you see how quickly you can start identifying your market bias this way? So we're bearish again. Next, we have a new low we create here. And our new high is, just double check, can't get this onto this high. So that's our new high. We have a breakout again to downside, so we can mark this off as a new break of structure. So you can see the market now has started to make smaller swings as we continue to break down. At that point, we don't mark this low off yet, but we can mark off a high straight away here. Now that is a strong high until we see a shift in structure. So now, from this point, we see it shift bullish. I'll mark it off as a break of structure for you. And I'll move this over. This becomes this high in the market, and I'll change this now to a weak high. This now becomes a strong low. And this is in fact, this is where we'd mark it off. So again, now we can start to mark out where we see the next break of structure. There's our break of structure. We continue to be bullish. From that breakout point, I can move this to here. And now we've got a new high marked off here. And again, I'll mark out the next break all the way over to this bullish candle. So at this point, we're doing nothing until you see that breakout. After we see this breakout, this becomes a new low. Let's grab this line. From that point, then we're going to have, let's have a look at this. This becomes a new high. And this will become a new break of structure. After that, this becomes my new low. This becomes my new high. So that is how we read that price. Now what's happened is we create another break of structure bearish. Now I've gone quite far back on this 4-hour time frame just to show you the way I map this up, to show you how quickly this can be done. Now as soon as we see that breakout, I'm looking for a valid new high, and that actually comes here. So after that small candle breaks out, this becomes my new high, and I'll mark this off as a strong high. At this point in time, this becomes my new low, and this becomes my weak low market. Now that is all true until we've now seen another shift out bullish. Right there is a new bullish break of structure, and straight away this becomes a new high, and this becomes my low. So now we have again a strong low in the market and a weak high. And you can see how this is very easy to do. So a weak high in the market, this becomes a new break of structure again. Right there. So we're still bullish now on that 4-hour time frame, and this becomes my new strong low down here in the market. We continue to be bullish. At this point in time, we have a new break there, small break. So this is actually a very fast break of structure just there. Mark it out again. And you can see how we can sometimes have these larger moves and a smaller move using this type of structure. That's my strong low, and I don't have a current high, so I'll leave that one off. And that is how I've marked it up. So we've gone through this full price action, this full move, understanding where we were shifting up and down until we are now this current price. Now, combining it with multiple time frames, this is where we have the key. So at the daily at the moment, we know we're bullish. We made that break of structure. We're going to pull back on that swing, and then we started buying. Got another pullback, new high low, and we can start buying again. Now, even though this is a bearish move on the 4 hour at this point, there's going to be a reversal here out of this area on a lower time frame where we can capture a counter trend trade to potentially hold it to run for this high still. That's where we're looking for price to run to, is this high. So how do I mark this out? How do you use this to help in your own trading? Let's walk through this now step by step. Now we've gone through it quite quickly. I'm going to drop to let's go to the daily time frame. Let's just go all the way up to the monthly again. We'll start there so you can see how this works. So the way we use this structure is quite simple. We are going to look for the 3 levels that I've just quickly gone through, mark this up to show you step by step. We're going to use the break of structure, the BOS, for each time frame. We're going to use our high and our low. That's going to be a valid high or low. It's either going to be a strong low or a strong high or weak high or weak low, depending on the direction of the market. So what we're looking for valid break of structure, we're just looking for the candle to close through, like this one here. We close through the level. That's our valid break of structure. Now, in a bullish trend example, as we are right now, and then we'll pop down to a lower time frame to show you the bearish example. In a bullish example, as soon as you've seen this candle closing through, and closed candle, it must close. It's not doing an open candle, it must close. Then we look back for the last time, we see a candle closing down. That's the easiest, most simplest way for me to explain this. As soon as you see this candle closing down below this candle, that signals where we can mark our lowest point. So if this had a lower low, it'd be marked off the low of that candle. But as this candle has a lower low, we mark it from this low. Now we do the exact same for a high when we're looking for a valid high. This is called a valid high, valid low situation here. We look for the close down again. So if we mark off this candle first, does that candle close down? No. So we don't mark this off as valid high. So this is not a valid potential break of structure at this point. Where we see the first close down is on this candle here, closing below this candle's low. That's the first time we get that valid close down. It's the first time we can mark off this as a valid high. Once we have this, we then have what we class as our trading range. And that is going to be from the low to the high of this bullish range. What we're potentially looking for is the continuation of the bullish range to continue with that bullish trend. Now, obviously, in some situations, we can see that reverse, but we're on a monthly time frame. So that's a strong bias there for a monthly time frame. And that's how we look at that on an actual bullish move. If we now drop down to a daily time frame, well, I do believe we had a bearish move here. So let's look at this area of price on the way down. So if we mark this off as our area, after we see this low getting run, so I mark this off as a break of structure on that daily time frame, we do the same thing again. Once you see this candle closing down, let me get an arrow. As soon as we see that candle closing through and closed through that level, we look back for the last time we see a candle closing up. And that's that candle there, closes above that candle's high. We then mark off the highest point, and that is our current high on the daily. And we do the same thing when we're looking for a valid low. We're looking for that close up, and that happens on that candle, and we mark off this as our valid low. And that's your bearish trading range. It's that simple. So this high to this low, you're looking for a pullback continuation. Now, when it comes to actually looking at those pullbacks, there are ways we validate this as well using lower time frames. And when we're looking for entries, there's a few different ways we can look for an entry here, using what we class as the imbalance, using areas of supply and demand. And on this move, I can tell you right now what happened. Let me just mark it off. This actual candle here had a leftover imbalance, and that's where price pulled back into, fully filled that imbalance, swept the high, and most probably we're going to find down here somewhere on a lower time frame was even the area of supply. But that is how we can quickly look at imbalances in supply and demand. Now, I'm not saying this is a trade I would have taken on this time frame, but most probably there would have been an entry in a lower time frame here, understanding that this is in a bearish bias now. So that is quickly going through how you mark off your highs and your lows and how you're going to look marking out when your areas of break of structure. It's key that you understand that BOS must be a body candle closed through, and it must be closed candle, not an open candle. We cannot look just to see a wick like this. That's not a valid breakout. So if you're using valid breakouts just as wicks, stop using that and start using this type of mechanical structure that I'm sharing with you in this channel right now. So that's how we look at this. Let's now just remove this. We're going to carry on now. Let's go down to the 4-hour time frame where we left off. We're going to identify that this market's been bullish market here. So if I was to drop down to a 30-minute time frame here, what do you think we're going to see when we look at this area of price? Well, on a big run like this, on a single time frame, we can expect to see a strong trend on a 30-minute time frame. Let's have a look at the 30-minute time frame. Let's drop down now to that 30-minute. And what do we see here? A nice, strong, bullish trend. And that's how you can quickly identify where your trends are and which time frame you want to be trading. Seeing that 4-hour time frame, that bullish, moving like it was, we can expect to see a strong trend now on this lower time frame, looking for those trades. Now, where does that trend start? That trend, I believe, started right there. So I'll just mark that off so you can see where it starts. So that's the first place we see a reversal in the 30-minute hair trend. Breaks through, and then we continue to run higher. So from that, I can mark this off as a new break of structure. You can see how quickly I just mark this off. We don't even need to look. You can start to pinpoint where these levels should be. New break of structure again. Now we'll just zoom in here because it's going to be easier for you to see. Before we wrap up, if you're tired of second guessing trades or still wondering why structure isn't clicking, this might help. I built a full 90-day system that turns structure into something you can actually trust, not just theory. It's what helped Danny rebuild after losing nearly 300,000. He didn't just learn structure, he finally knew what to do with it. If that sounds like where you want to get to, the link is in the description. Apply for access when you're ready. So we had a pullback there. See, we had a breakout with a bullish candle closing through. That's our pullback candle. Let me just mark it off. That candle closes down below that candle. It must close below that candle's low. It's the first candle closes down. You've just got to look at the close before the previous. So to say this candle didn't close below this low, the wick was down here, and then you saw this candle closing down, then that's your closed down candle. And that's the one you'd be looking at closing down, but you still mark it off from the highest point for your breakout point. That's your valid high. So now we have a breakout. What do you see straight away? That candle closes down. So this becomes a low, and this becomes your new breakout level. So you can see we just failed there. We only wicked through. It's not a valid break of structure. Market continues bullish. From here, we have a new high. Why? Because we closed down on that candle. New break of structure, again, bullish. We do the same thing again. Candle closes down. We mark off the highest point, break of structure, and that's how easily and quickly you can start doing this. If you're telling me you can't do this, you can't understand it, please watch this video again and again and again, because you will start to understand it. Now that does mean at this point in time, this would have been a valid low on the actual 30-minute time frame and a valid high at the same point as it would have been on a 4-hour time frame. Sometimes you can find this happen, but what we do have here is an internal structural pullback. That is for another day. I just want to go through this. So we can identify this becomes the same breakout point on a 30 and a 4-hour. The market comes back. Now this is my low. So again, this becomes my new high on a 30-minute at this point. We just swept through there and then we break up. So I'll mark that off now as a 30-minute break, so you can see where that sits. Our 4-hour, I believe, was the same area around there, but that's our 30-minute. Now, even though this is our major break on the 30, we have all this movement here, which potentially shows some internal structure. As the market continues higher, okay, we break out. This becomes a low, same low nearly as the 4-hour. This becomes a new break of structure on the 30-minute again. we have a pullback just now, and you're seeing another run higher. So this becomes my low. I'm going to mark it off with this level, my current strong low now on a 30-minute. And where's my high? Well, that's going to be my high, and that's my week high. We've just run through that week high. So we just mark it off, a week high in the market. So what's happened here is the market basically has come back into this last sell to buy move. We're holding at that area and we're pushing up for that high. So how could we find a potential entry? Let me just mark this off so you can see where I would have this marked. My last sell to buy move. The market's come back down and we had a nice push down and a reversal just took that high. If we now drop down to say a 1 minute time frame here, this is where I can start looking at the chart as we push in. So what do we have? Well, first off, we have some equal lows here marked. So I could quickly say, I've got some roughly equal highs. I'm going to take this off at the moment. Some roughly equally highs sitting there, which is going to create some area of liquidity. So that means below these lows, we're going to have some liquidity. Normally, it's going to want to run these areas down into something to the left. So what do we have over here? We have an area of leftover supply, demand, sorry. Okay, so I can mark this out, this last sell to buy move, and I'll drag this across, and there you go, fully filled to the pip, this area of demand. And look where price runs from, straight to that high. Now we take liquidity into that area, and then we shift out. And not just that, but we also created this area of liquidity sitting below these lows as well. So we had areas here of liquidity being built up. So the market reversed, came back, pushed away, brought in more buyers, left this liquidity, these equal lows, pushed down, and now we had a strong push up. Now what we're looking for is the market running into this area, knowing what we can see over here to the left. And once you understand this, that's where you can start picking up your entries. Today's not about the entries, but you can see how this could have been caught as long as you understand to start with your foundation of this type of market structure. That's the power of it. Understanding it, then you can start bringing into your concepts of your supply and demand, your imbalances, your liquidity, and all that you can find inside the 90-day profit trading system. So if you want to learn more on the internal structure and how you can map that as well with this type of swing structure, with the smart money structure, check out this video now. It's going to help you go through that step by step.